Good day, everyone. I am Adoms Uju Francis, PhD, the host of The Informed Money. With me here is Mr. Victor Akwason, a financial market analyst, Mr. Seun Abilawon, a financial market analyst, and Mr. Kalu, a financial planner in the US. Okay, today, this is the first edition of The Informed Money, and we're talking about understanding portfolio management. Now, this question is, most people just hear portfolio management, they hear portfolio, and they feel portfolio is only for the financial experts, but they forget that portfolio touches all sphere of life. So we're here to make them understand. First of all, I know, Mr. Kalu, what is a portfolio?
Yeah, just in simple terms, look at a portfolio like a basket, yeah? So a basket of assets that you put together and you can manage yourself or give to a professional to manage. So in simple terms, a portfolio is just a basket of assets that you can put together and that you can manage yourself or you have an expert manage for you.
Now, who do we call that expert? We call that expert probably a portfolio manager, right? We call that expert a portfolio manager. And Victor, did they need any special training, just explain to us, what do you think a portfolio manager is?
Yes, a portfolio manager is someone that actually manages the assets in, for example, the basket Mr. Kalu talked about.
Yes.
And sometimes it's good to have professional skills or knowledge on portfolio management, but anyone can actually be a portfolio manager, depending on the capacity.
Okay. What do you think, Mr. Kalu, someone being a portfolio manager?
Yeah, you can decide to manage your portfolio by yourself. Then, of course, you have regulated third parties that do a fiduciary management activity for you. So fiduciary just means it has a duty of care towards your assets, and then they are regulated by a regulatory body, more or less. So you can do it yourself if you have the skills, or you can handle the third party.
Okay, fantastic. You know, speaking of fiduciary duties to carry on portfolio management, it brings to say that we have different types of portfolio. We have the active portfolio management, the passive portfolio management, the discrete and the non-discrete portfolio management. So now, in our economy, I won't say in our economy, globally, what do you think, which kind of portfolio management do you think is being utilized well between the active and the passive?
So I think most times when we hear portfolio managers, it's mostly the active type where you have a third party managing your assets on a fiduciary basis. But it's interesting that Warren Buffett, one of the biggest investors out there, does talk about just having a passive portfolio where you just buy like the index fund and you just compound results and you let it just grow by compounding. So I think the most popular and the one we see being marketed about is going to be the active, whereby you're going to chase return.
Okay, Mr. Seun, what do you think?
The active portfolio management is being utilized more.
And
we have a lot of people now owning portfolios, but they don't really know that they own portfolios. Like we see a lot of people buying, like jumping into the crypto space, for example. They actually have a portfolio, but they don't know that it's a portfolio that they're managing because they're actively involved in buying or selling that particular security. So I believe it's the active portfolio management that is in play.
Okay. Now, following this we've seen that there are different asset classes. We have a lot of asset classes. We have stocks, bonds, crypto, we have real estate, we have commodities, we have oil, we have so many of them. In fact, the internet has made it easier for us to have access to these assets. So now, is there need, because most people in the world we live in now, most people, because of they have this access to these assets, they jump into it. The one that's favorable, they just jump into it. But now, because of we're understanding what portfolio management is there a need for an individual to have like a record book, a portfolio management, a portfolio, stating these assets that the person owns? What do you think, Mr. Kalu? What do you think is the process? How should an individual go about this when most people don't have, they don't consciously write down their assets or document this to turn it into a portfolio? But what do you think?
Yeah, I think you raised a good point. It's very important to know what you have. If you don't know, if it's not recorded, it doesn't exist, more or less. So, and technology makes it a lot easier for you right now. If you go online and you buy, most of the apps will track what you own. And if you link it to the market, it will tell you what it's doing per day. But it's also important if you have a manager to get quarterly reports and all that. So very, very important, even if you're doing a passive investment where you just buy and leave, that you know what you have and that you can actually just go and change market prices and get it marked to market. So knowing what you have, it's very, very important. If you don't know what you have, then you don't know where you are going on your goal, on your financial journey.
Okay, fantastic. What do you think, Mr. Victor?
Yeah, I actually think part of the things you need to consider in creating a portfolio is to assess your goals. You have to know what your time frame, the goals you're setting, and what you hope to achieve. Yeah. And then you also need to consider your capital you want to use in opening a portfolio. You also need to assess your risk appetite, the amount of risk you can take. Yes. And I think with this, it's something that you should also consider, aside just documenting the portfolios you have. You need to be able to gauge these things and be sure that, okay, this is really what you want to go into. This is what you hope to achieve. So I believe that that's very necessary in creating a portfolio.
Okay, what do you think, Mr. Seun?
In as much as we have our personal financial goal, I believe that everyone has their own risk appetite, like you said. And it's important for us to know what our risk tolerance is, because a lot of people want to make money, but they don't put into consideration the level of risk that's involved in actually growing wealth. So in terms of managing portfolios, it's very good to know what your risk appetite is. Are you a conservative investor or are you an aggressive type of investor? And also, do you know yourself? So you are not just jumping into something that you don't have any idea and you end up losing your money because there's actually risks in the market.
Yes. Okay. Thank you. So, Mr. Kalu, finally, what do you think is the an ideal portfolio mix? We know that this is not a financial advice, but an ideal portfolio mix for someone who just, let's say, a low-income earner or a middle-class income earner. What do you think is an ideal portfolio mix?
I would say the question will depend on your objective and your risk profile. Generally, if you have a high affinity for risk, you should do more equities. And if you have a longer term to be in the market, then you want to be long equities, i.e. you want to put bulk of your fund in equities. If you're a bit more risk averse or a bit older, you want to basically hold back and see if you can do more of fixed income, i.e. bonds or bank deposit, treasury. So it's going to be a balance between equity and fixed income. And the percentage, how you allocate that will depend on your appetite for risk and your objective. Are you long-term? Are you short-term? How long do you have to invest? And can you take amount of risk? If you answer those three questions, that tells you how you can allocate your monies between equities, which is variable income, and then bonds with a fixed income.
Okay, fantastic. Seun, what do you think is ideal?
Like I said, it's very important to know your risk tolerance. That's actually the basics, because you need to know what you can afford to lose in the market. Okay. Because the market could eat you up. We've heard a lot about the financial crisis and how it has actually affected people. So when an individual knows what he can take, that's very important in my own perspective. Okay. Before he can actually jump into creating or managing his own portfolio.
Okay. What do you think, Mr. Victor?
Yes, I think it's actually a brilliant one, Mr. Kalu said. And for people like me that are quite not really open to so much risk, I think I would like to specify that in designing your portfolio, and both for the variable assets and the fixed assets, it's also important to diversify. Okay. And having different asset class in your portfolio, it kind of protects you. For those that are really not maybe open to so much level of risk, I think that should be able to help in deciding your portfolios or the assets in your portfolio.
Okay. So now, in understanding portfolio management, we have a keyword: risk. Know your risk tolerance. Know the different asset classes. Know the we can't predict what each asset classes can give to us or give to the person. So the person needs to have a more diversified portfolio and understand the appetite, the risk appetite of the person. That is fantastic. So I think that is good. Mr. Kalu, thank you so much for joining us on the first edition of this show, The Informed Money. Thank you so much for joining us, and thank you for your contributions. Thank you so much, sir. yeah, we've understood what portfolio is and portfolio management, who a portfolio manager is, and that brings us to the next section, the currency markets. With me here is Seun Abilawon, a financial analyst, as I said before. Please tell us, what do we expect this month?
All right, thank you very much.
Yeah.
As the world recovers from the COVID-19 pandemic, investors have bet on the dollar plummeting.
Okay.
However, what seems to be like a relentless downward trend over the months has actually stopped. Now, the big question now is whether or not the data release from the non-farm payroll is going to lead to a strong US economic rebound. As we see from the job reports of April, it came out low as expected, which actually caused a lot of decline in dollar.
Okay.
Dollar was weak throughout the period of April. So now that we're seeing we are all anticipating whether or not the dollar is going to be strong ahead of the NFP reports.
Okay.
So when we move over to the dollar index charts, we see that we have been on a downtrend for weeks. However, over the past few days, we've seen a little bit of pullback to the upside. Now, the question is dollar going to be able to break the 90.430 level? If we can have that strong break, then we could continue seeing a rally to the upside. However, if dollar cannot hold that level, dollar could continue to dump further. And when we see weak dollar, we know that we want to go long on foreign currencies. So now we are going to head over to the two major currencies that is actually on our watch list. That's the British pounds against the US dollar and the Australian dollar against the US dollar. Now, when we take a look at the British pounds US dollar, we see that on a weekly, price has gotten to a strong resistance area. Now, what do we expect now is a little bit push to the downside because we know that there's going to be a lot of selling pressure right at this level. All right, when we take a look at the daily chart, we see something very interesting, a formation of what seems to be like a double top. And we see that pounds has been dropping ahead of the release of the non-farm payroll. So we could see the pounds USD go down to the trend line, the 1.40 big figure, or we could see a break down lower to support level at 1.37.
Okay, excuse me, sorry. So now, we're saying that could that be like now? We know that fundamentals, which is NFP, always they use it in driving the retailers or retail market people out of the market before they head to the main direction. So we're expecting like now, like with the red candle we are seeing right there, it's already giving probably a first drop. Probably yes. Understanding the law of resistance and support, that's a very strong resistance. So we see that everybody have started shorting at that moment. Yes, probably with the. Do we think that with the non-farm payroll coming out, it drops to take people out, then carries on?
Yes, we've been treading on water for the past few days, actually, because the data release is going to give us more insight to what we're to expect from cable. If we get a positive dollar, we could see cable decline even lower. And that could be a confirmation to actually short the British pound US dollar. So we're expecting it to go as low as 1.40. However, if this level resists to hold, we could see a rally higher, breaking this resistance level, and even going higher to as higher as 1.48 big figure. All right. Also, when we move into our Australian dollar pair, we see that a very interesting price action has formed. What seems to be like a head and shoulder pattern on our charts is now in play. We see that the buyers actually give up their bullish steam, and that's now going to lead us to the question that is Aussie getting weaker, because we want to know whether we should continue the push to the upside, because this formation now just gives us something. If we have a bullish dollar, we could see Aussie continue pushing down lower. So we're expecting it to go down to this area of support here, which looks like the trend line. Now, the neckline, sorry. When it gets to this level, we could either see a break of this level, because this is going to be the third time that Aussie is going to be testing this level. So after the break of this level, we could go lower to even 0.73 big figure. So however, if we get dollar continue dumping, we could see Aussie continue its rally to the upside.
Okay, so now this is more like a pattern. Another thing about the currency market is know your levels.
Of course.
Yes, know your levels. So now we know our levels right now. We know that these levels have this price action. We look at the historical data, what has happened in the past, what is happening now, and what's about to happen with our levels. We are not gods. The only thing we can do is just to predict, but we cannot say this is going to happen. But looking at this pattern, so we are looking at it going to the neckline, breaking and going down, or reaching that neckline if USD continues to dump and the Aussie keeps pushing up. Okay, nice. Okay, well done.
All right, thank you very much.
So now we know that everybody needs to do their due diligence. This is not a financial advice, but at least, as we've said already, they should know their necklines, they should know their levels before they take into action what they think the market is to be, right? All
Yes.
right. Okay. Thank you very much, Abilawon, for this my currency insight. Now we're diving into the cryptocurrency markets. We need to know what has been going on there. With me on the cryptocurrency market space is Mr. Victor Akwason.
Thank you very much. On today's crypto segment, we'll be looking at some key tokens and coins in the crypto market. We'll be looking at the Bitcoin, the Binance, and the Ripple.
Okay.
For so many reasons, these three coins have been on our attention because of the way price has been playing around quite recently. But we can see from late last year, we could see Bitcoin actually making a very impressive bull run, finding support at the 32,000 level. We also saw it finding this support and then continue its rally upwards. We saw it clear higher lows and higher highs, indicating a very, very strong bull run. But sometime during the late period of mid-April towards May, we saw a very massive decline in Bitcoin. And for so many reasons, due to fundamental reasons and some other factors, we saw Bitcoin fall down up to the $32,000 region. We've been seeing this play in price. And if you can see, interestingly, when price actually broke this level, we saw a very clear signal that Bitcoin was about to reverse. But many people didn't get this. We just thought it was a usual decline in the market, 13% retracement. But we saw a very massive decline. And currently, we're seeing Bitcoin play around the 32,000 region, the 40,000 region. A lot of people have been wondering, what is next? Are we going to see more decline? There's been a lot of speculation that Bitcoin could drop up to $20,000, $10,000. But seeing this, back in early February, January, we saw Bitcoin having a very key support at this level. And personally, I don't think we should see more down movement, except there is some fundamental reasons for it. But if we move further, we can see how price has been playing within the 42,000 resistance region and the 32,000 support level. Currently, we could see our triangle pattern, and price have been trying to, break out of this level, but we find it difficult. We could expect more ranging in the Bitcoin for now. Prior to this, if we can see a break above the 42,000, 45,000 region, we should be confident about more bullish movement on Bitcoin. But if we see a break below, I think the best bet is for $20,000.
Okay, so what's me, I'm always, yes, we understand resistance, support, levels and all, but I always think like an institutional person. Yes. For example, we have, yes, Bitcoin have been making a lot of noise in the market. People have been buying from the top. We always know that we don't buy from the top, we buy from the bottom. Some people have been saying buy the dip, and the dip has been dipping. Yes. But I believe that the BTC market has been going down, and I see that it has taken the attention of the wealthiest people in the market. In the economy, like the likes of the Tesla, owner of Tesla, Elon Musk, and the rest. So I think this is a way to move people's attention off the market. We can actually see BTC spring back up over the night. A lot of people have been taking their assets away from BTC, and this gives opportunity to the top tiers, to institutional firms to take advantage and move it. What do you think? What do you think about that?
Yes, there've been speculations about power tussle in the crypto space because a particular amount of people have been able to accumulate large quantity of this asset, and then the balance is not really favorable in the market, say. But I think this is more of a power play, and judging with all the negative press surrounding the crypto market, this also facilitates or might be the reason why we have this massive decline. But from my own point of view, Bitcoin and the crypto market as a whole has a very significant role to play in terms of development and technology in the global market as a whole. Yeah. So I personally see more upward sides for Bitcoin, but the real question is who is going to be favorable and who is going to be left behind. Yeah. I think that's just what's behind the whole rally in the market.
Okay.
All right, thank you. So moving forward to the next asset we have on our crypto segment, we're talking about the Binance. One of the beautiful things about the Binance coin is its use case. I believe so much in this project because a lot of people rely on the usage of Binance for so many things, and including the exchanges, including the other project coming on as Swipe for retail transactions, using an easy access to use your crypto to do your basic buying and selling. Now, looking at the Binance coin, we can see back in February, Binance did an impressive rally. Nobody really expected it that much. We were seeing about $50, $30-something, and then all of a sudden we saw an impressive move up to $304 level. And then, the market, of course, doesn't just go one way. It did a retracement and found support at the $210 region. We've been seeing this support play out, and then we saw another breakout and an impressive run up to $693, $695 region. So finding support at these key levels are what brought our attention to marking out our support zone, because they found the support first after it made the initial bull run, and then making the second one, it found the support at the $480 region. Then we all, of course, due to the recent decline in the market, general across board in all the assets, we saw it fall back to that initial support it had at the $210 region. So saying this as a crucial support, Binance have been trying to rally amidst other coins that are really struggling. Binance have been able to do well, breaking out of the $300 region, finding the support there. Moving forward to our 4 hours, we could see a downward channel indicating price might want to go down, but then we found the support still on the $300, $305 region, and we're currently seeing a bounce off. My interest is actually at the $480 region because it was a key resistance level we had in the initial drop down. But we are waiting to see, because personally I don't see Binance going below this $300 region, and we're anticipating the breakouts sooner than later above the 480. And when we have that, you can be rest assured, it's not a financial advice, but you can be rest assured that we could see a new all-time highs up to $750 to $1,000 probably before the year runs out. This is my outlook on Binance coin.
Okay.
Moving forward, we have the Ripple.
Yes.
There have been a lot of bad press, a lot of lawsuits, and it's been stalling the growth of Ripple. Ripple is quite a very interesting coin, but we can't really see much of a rally because of all this negative bad press and lawsuits that have been stalling it. We could see it ranging at the $0.4, $0.7 region. It took quite some time. While other coins in the crypto asset were making impressive runs, we saw a lot of stall on the Ripple at this region. But when we eventually broke out of that region, we saw an impressive run to a significant all-time high at $1.9. And amidst all the things that's going on, Ripple was able to find support at the initial $0.71 region. It actually found support at the $1.21 region. That is why we can actually see a resistance between the $1 and $0.6, $0.7 region. This is quite a significant level, and I don't see Ripple going down below. We could see our trend line supporting price upward movement, and sooner than later we should expect to see a breakout at this $1 region, 1.5. Seeing that, I'm very pleased to say Ripple can actually rally higher to $3, $10, the case may be. That is my market outlook on crypto assets.
So now we know that for the cryptocurrency, for a coin or a token or an NFT to survive, it needs a good usage, user experience. People will have to find use for that coin.
Yes.
I believe so. Look, we've understood the portfolio management, we've looked at the markets, both the cryptocurrency and the currency markets. So now, the key thing here is risk tolerance. In understanding portfolio management and managing your portfolio is to know what kind of risk are you willing to take. You need to know that there are different asset classes. For example, as a person, you need to know that, okay, I have 1 million naira. I want to use 200,000 naira to pay for something. I want to use 100,000 naira to buy something else. You are having a portfolio of 1 million naira. So it's left for you to understand how to diversify this. So also, so you know, cash is also part of a portfolio. For example, you have to document it. You have to document these assets that you own. You need to put a list. You need to put a folder. You list them out. Okay, you have 100 buildings in Ikoyi. You have 50 buildings on the mainland. You have financial assets worth so and so. These things need to be documented so that you know your worth of portfolio. And remember, risk tolerance is also key, and also diversification. You have investment in agriculture, you have investment in other commodities, oil and all that. So that brings us to the term of the month. The term of the month is called rebalancing. Rebalancing is the process of managing your portfolio in order to check the weights, as in the percentages. For example, you have a house, and that particular place, the government has passes a law that affects the price of the house. Okay, you say, okay, I want to sell so and so house. You liquidate that particular place and get in a place that has a better potential. That's what we call rebalancing. You are rebalancing your portfolio. You are selling something out of your portfolio to buy something that will make your portfolio yield more. So that is what we call rebalancing. Rebalancing your portfolio is the process of buying or selling some of the assets in your portfolio under your purview to gain more and balance your portfolio. That's just it. That is the definition of rebalancing. So the term of the month is rebalancing. Now, finally, as I said earlier, that we'll have something for you, for the viewers. Subscribe on the channel, like the click like on the video. Follow all the social media channels, the Instagram, the Twitter. Follow the channels, and you stand a chance to win a Samsung A21. So follow, subscribe, and also suggest the term for the month. If you can, if your term of the month can be the next month is one we choose, fantastic. You stand a chance to be a winner. So thank you very much for joining us on the first edition of the Informed Money. And thank you very much, Mr. Victor, Samuel. Thank you all for attending the program with me.